OPS Podcast, Episode 3, Market Structure. Welcome, operator. Today's briefing will focus on market structure. One of the easiest ways to damage a trading account is to make decisions without context. Price rises, and attention gets pulled toward the long side. Price falls, and attention gets pulled toward the short side. The latest emotion, headline, or candle begins to feel more important than the conditions surrounding it. Before long, the market is no longer being read. It is being reacted to. Price movement by itself rarely tells the whole story. A strong candle can appear in a healthy trend, before a reversal, inside a range, at support, beneath resistance, or during volatility with no follow-through behind it. At a glance, the movement may look the same. The meaning may be completely different. That is where structure becomes important. Structure is not just higher highs, lower lows, support, or resistance. Those are labels. The harder skill is understanding what those areas mean while price is still developing. Structure gives movement context by showing where price has been accepted, rejected, and where participation has changed character. A candle does not matter simply because it is large. It matters because of where it appears, what it breaks, what it fails to break, and whether the market confirms or rejects the move afterward. A breakout through a prior high means one thing when it produces displacement, holds the retest, and attracts continued buying. It means something different when price pierces the level, stalls, and falls back into the range. The first may suggest acceptance. The second may suggest a failed auction, trapped buyers, or liquidity taken without continuation. This is why operators do not treat structure as a drawing exercise. Lines on a chart are not the point. The point is behavior around those lines. Where did price expand? Where did it hesitate? Where did it sweep a level and reverse? Where did the market fail to continue after appearing strong? Structure is not static. It develops through tests, reactions, failures, retests, and confirmations. A range boundary may act as resistance until price is accepted above it. A trend may appear intact until each push produces weaker follow-through and deeper pullbacks. The real value is not merely labeling the market as bullish, bearish, or ranging. The real value is judging whether current behavior agrees with the larger condition. When reading structure, operators reduce the chart to a few direct questions. Where is price in relation to the larger range or trend? Did the move break something important or only move inside existing noise? After the break, did price accept the new area or reject it and return? Is the lower time frame movement supporting the higher time frame condition or fighting against it? These questions do not create certainty. They create order. They slow the process down long enough to decide whether price is showing continuation, failure, absorption, or noise. If the higher time frame is expanding upward, a lower time frame pullback may be opportunity. If the higher time frame is trapped inside a range, the same move may be noise. If price breaks a level but cannot hold beyond it, the break itself may become information. What matters is not the move alone. What matters is the move in context. None of this predicts the future. Structure defines the environment where decisions are made. Operators do not stop at what price is doing. They ask where it is happening, what condition surrounds it, and whether the behavior fits the larger auction. Structure is not a signal. Its purpose is not to command action. Its purpose is to help the operator judge whether present behavior fits with what came before. Without structure, every move appears important. With structure, some moves matter more than others. Experienced operators are patient because meaningful information develops through reactions, tests, failures, retests, and confirmations. A single candle may attract attention, but the larger story takes time to reveal itself. Patience is not the absence of action. Patience is the discipline to keep observing until the evidence becomes clear. Operators avoid entering the market with conclusions already formed. They gather evidence first, allow the market to communicate, and only then begin forming conclusions. Accounts are usually damaged by decisions made in poor conditions before the environment has been properly read. Market structure is not about finding trades. It is about understanding the environment those trades exist in. The method may change. The need for observation does not. The operator does not guess. The operator confirms. If you found value in today's briefing, like, subscribe, and enable notifications. Remember, structure tells the story. Price simply delivers the message.